What's up traders? Let's say me or anyone has given you a proven back-tested strategy that makes money over the long term. Now my question is, if you use the strategy straight away, will you make money from the market? I can almost guarantee that you will not make money from this strategy. The reason is simple. Any strategy in the world comes with some losing trade. So if you start a strategy using straight away, then if it start with some winning trade, then you started to believe that this strategy is a holy grail and you might take a big risk on the strategy. At some point you will blow your account. On the other hand, if you start with the strategy with some losing trade, then you lose faith on the strategy. So what's the solution? The only way you can be successful with any kind of a strategy, if you see how this strategy perform by your own eyes, because our mind is not designed to believe on others. Our mind is designed to believe on ourselves. So if you see how a strategy works over the long term by your own eyes, then only you can stay grounded when the strategy is winning, or you can keep faith even when the strategy is losing. So in this video, I will show you step by step how to do backtesting and how to optimize a strategy. Remember, most people do this in a wrong way because people limit a strategy with certain risk to reward ratio. What do I mean by this? Remember, every strategy perform a different risk to reward ratio. Say a strategy could perform in 1 to 2 risk to reward ratio very well. Maybe another strategy perform at 1 to 3 risk to reward ratio in a very well. So you don't know what is the optimal risk to reward ratio for a particular strategy. So I'll show you today how to optimize and backtest a strategy so that you can find the maximum benefit from any kind of strategy. Sound interesting? Then smash the like button. Hi, I'm Forex Wizard. If you're new to the channel, hit the subscribe button and also press that bell notification so that you don't miss out any of the wizardry I post almost every day in this channel that will change the way you trade. I will be right back just after a small intro and disclaimer. Okay guys, so we will be using this spreadsheet that you are seeing on the screen for backtesting. Now I will link this spreadsheet in the description area so that you can download, but watch this video till the end so that you know how I am performing the backtesting in a proper way, and you can use this spreadsheet for convenience. So when you do the backtesting, you can do the same way. So before I backtest, let me show you what this spreadsheet is mean. Here in this column we will write what currency pair we are backtesting. Here you see 1 to 2, 1 to 3, 1 to 4 and 1 to 5. So every time we will take a trade according to our backtest, we will place the value of what maximum risk to reward ratio we can attain from a single trade, and at the end of the backtesting, after doing couple of backtesting, then we will see total which risk to reward giving us the highest return, and that is the goal of a backtesting. Now for the sake of this backtesting, we will backtest a strategy that I will show you now. Okay, so we will perform our backtesting in this TradingView charting platform. For those who don't know what is TradingView, TradingView is a charting platform that is available for free as well. There is paid version as well, but if you want to backtest on the daily chart, then you can use the free version. So I will do the backtesting on the daily chart, so that if you have the free version, you can use this backtesting in the same way. So for the sake of this backtest, we will be using a strategy based on 20 period and 10 period exponential moving average. So first let me plot the moving average, then I will explain the strategy, and then we will be backtesting that strategy. Now to do that, first go to this indicator section. You see this indicator, click on it, and then type EMA. So in this search area, type EMA. So exponential moving average, click on it. So click twice because we need two. So when we click twice, you see this one line. Basically there are two. Double click on this line, and then you see this input. So in this input section, what we will be doing, we will be using first 20 period moving average, so 20, and the style will be using blue color for this 20 period, and we'll plot it. So you got this blue color is this 20 period. Now click on the other one again, double click. Now this one will be using 10 period. So instead of 9, we will write 10 here, and then style will use red for this 10 period moving average. Now we can see the two moving average on the chart. Now let me first explain. It's a simple strategy used by many people around the world. Remember, all the great traders uses simple strategy for their trading. So what is the strategy? Very simple. We'll be using, if blue moving average above the red, we will consider that any instrument in a downtrend. If blue is below the red, then we will consider that instrument, any instrument in an uptrend. So this is the criteria for our downtrending and uptrending. So what we will be doing is, any candle, if any candle crosses this blue 20 period moving average and close back below, then we will take a trade. Simple. If it is a downtrend, then we will be selling. If it is an uptrend, then we will be buying. So this is the simple strategy, very simple. Again, I am repeating, if the instrument in a downtrend, any candle crosses this blue or 20 period moving average and then close back below, we will be selling. Our stop loss will be above, and take profit. We will see how we can do that. So let's start with Aussie dollar. Okay, so to start the back testing, first of all, remember, you cannot start from anywhere like this. If you click here, you say that, okay, I will start from here, then you cannot perform a proper back testing, because you already have seen what is on the right side. You know that the market was falling. So if you know this, your decision will be biased. So to eliminate this problem, what you can do, first of all, click on monthly M, and then go to the chart where you can't see any candle at all. Now you click replay, and then go to the section where you can see the date. So you see this is the monthly chart. Now again, remove the candles. Now you see the date below. What date you want to start, you can click on this monthly chart. Say for example, if I want to start, say April 2020. Okay, if I want to start April 2020, now this is monthly chart. Okay, after you replay on this monthly chart, then go to the daily. See, now you don't know what is on the right side, because it was a monthly chart and you turned into daily, so all the right side is unknown to you. Now you can start your replay. Now as we discussed before, that our strategy is based on 20 and 10 period moving average. Now let's start replaying, and then we'll see how this is happening. So what we will be doing is, if we see that blue is below red, then we will consider an uptrend. As you see that the chart already, the blue is below 20. It has just crossed the moving average. Now we can consider that this instrument in an uptrend. So what we will be doing, we will be waiting for any candle to cross blue and then close back above, because it's now in an uptrend. Let's replay. Okay, so we have already found that this red candle crossed this 20 period and then closed above. So we will take the trade from here, just from here, and our stop loss will be below this candle, FUP below. Now what we will be doing, we will not specifically define how many risk to reward ratio we will be taking. We will keep running the trade and we will see how many risk to reward ratio we can achieve. Let's replace. So what we are seeing, the price is moving up now, moving up. Okay, how many we already achieved? 1 to 7. Let's say we will take up to 1 to 5. Okay, so this is 1 to 5 risk to reward. Now on the first trade we have found 1 to 5 risk to reward. Now go to our spreadsheet. Now you see 1 to 2, 1 to 3, 1 to 4 and 1 to 5. Now if you keep this trade running, then you can achieve 1 to 2, 1 to 3, 1 to 4 and 1 to 5 risk reward. All this possible. So we'll write 2 in the 1 to 2, 3 on the 1 to 3, 4, 1 to 4 and 5, 1 to 5. That means we can achieve any of this goal for this trade. Now delete this one. Again wait for the price to come back to 20 period moving average. Okay, so we see that the price already hit the 20 period moving average and closed back above. As you see that blue is below the red, that means 20 period is below the 10 period, the trend is still up. So in the uptrend, what we will be doing, we will be buying, placing our entry here, keeping our stop loss below this area. Okay, and we will keep 1 to 5. As you see that we will keep highest 1 to 5 risk to reward, and we will see how much we can gain from this trade. Okay, keep running, keep running. All right, so it's moving up now. Okay, it might hit our stop. Okay, it's going up. Until it hit our stop loss, we will keep running to see. Okay, we already achieved 1 to 5 risk to reward on this one as well. So what we will be doing, we will be writing again 2, 3, 4 and 5. So all this goal is achievable from this trade as well. Now again we will be waiting for the price to come back to 20 period and then we will take our trade. Okay, so we already have seen that the candle already touched this 20 period and then closed above. Now what we will be doing, in the same way we will go for long. Now this time we can place a pending order. As you see that the price is well above this 20 period, let's place a pending order at the half of the candle, keeping our stop loss below this level, and then we'll take again 1 to 5 and see how much we can achieve or we can hit our stop loss. Okay, so it's still moving, it's still in drawdown, and now it's in profit. Let's see. Okay, still going. All right, so we can break even the trade. It's quite a few days already passed away. We can break even the trade. That means we can move our stop loss at the entry. So in case the trade goes in the wrong way, we will not lose anything, but we will lose the profit. Let's see if we can achieve 1 to 5 before happening anything. Okay, so it looks like we might find this time also. Okay, let's see what's happening. Okay, so it's still a little bit away from our profit target. Keep running. Okay, so it just hit profit target. See how this strategy is working. Now it's still 1 to 5, so we can achieve 1 to 2, 1 to 3, 1 to 4 and 1 to 5. Now let's do the same again. We will be waiting for the price to come back to 20 period moving average, and then we will be still, you see the 20 is below the red, that means that 20 is below the 10. It's still, we can consider, okay, the price already hit that 20 period, The trend is still considered to be up, so we'll be buying. As soon as the candle is closed here, the next one came down, so let's say we are buying from here. Our stop loss below this level and our take profit as usual 1 to 5. We'll keep 1 to 5. Let's see if we hit stop loss or we still can keep running. Okay, the price is still moving up. Okay, at this point we can break even the trade. Let's say we are still running. Let's see what happened. Okay, this one also hit profit target 1 to 5. Keep 2, 3, 4 and 5. Okay, so let's say now what's happening, you see that already this moving average crossed. Let's see what happened next. Okay, now this time you see the blue is above the red. That means we can consider it is in a downtrend. Now we will be waiting for the candle to touch 20 period and then close back below. Okay, what happened, the candle already crossed above 20 periods and closed above, so we will not take any trade. Let's see what happened. Okay, so the price looked like consolidating on the sideway. So when you see this like this, that blue and red is crossing each other like this, that means the price is in a sideway. When it is in a sideway, we will not take any trade, we'll keep running. Let's see how the market structure formed. Okay, now we see a breakout to the downside. Let's see. Okay, now what you see, that see blue is above the red. Before was blue is below the red, uptrend. Now blue is above the red, so we will be going short. Let's say we will go short from here, keeping our stop loss just above this little bit of dodgy, and we'll keep 1 to 5 again, and let's see what happened next. Okay, all right, the price hit stop loss. Very simple, it happens always. So this one will write loss L, so 1R. When we are losing, we will write only 1, because we will keep only 1% risk, but we will take 2, 3, 4 or 5% profit. Now let's see, let's wait to see what market structure is forming. Now again the blue is below the red. That means again we can say that in this area it's in an uptrend, but the price is basically consolidated. Okay, what we have seen, see, now we can consider that this part is in an uptrend, but as you see that when the price consolidate like this strategy doesn't perform well, so try to stay away. Let's say we are not trading. Okay, the price is highly consolidating, and when it is consolidating, you can't say it is in an uptrend or downtrend, because the price is clearly consolidating. When it is consolidating, better to stay away from the market. Okay, now clear breakout to the downside. You see, now we'll be waiting for again the price to touch blue, that means that 20 period, and then as soon as it will touch and close, we'll take a trade. Okay, clearly the price hit this 20 period moving average and then closed back below. So now we'll be buying or selling, right? Because as you see that 20 period is above the 10 period, that means in a downtrend. Okay, if you can't remember, write it down and then try to remind yourself few times so that you don't forget it. Now we'll be selling, we'll go for shorts. Let's say we'll go for short from here by pending order, keeping our stop loss above, and then again we will target 1 to 5 and see how much we can achieve, and we'll write it down. So let's see. Okay, it's moving to the downside very well, moving to the downside. Okay, moving down, going up. Let's see. Okay, so the price went up. If you break even the trade, you might be out of the trade. Let's say we didn't break even trade, we want to run it. Let's see what happened. Might hit stop loss, or okay, it broke to the downside again. Okay, all right, so hit our profit target now. Okay, finally see how many days and how it performed to hit the profit target or hitting the stop loss. So still this strategy is performing here as well. 2, 3, 4 and 5. So as you see that many trade we have taken, there is one trade is loss. All this trade still we could achieve highest 1 to 5 or more risk to reward. Okay, now let's see the same backtesting with another currency pair. Let's do in Euro AUD. As usual, we'll click on the monthly and then we'll go to the chart where we can't see any kind of candle, then hit replay. Let's say we will be performing 1st of February 2021. Okay, now this is the monthly chart. Now let's go to the daily as usual. Okay, now this is the situation on the daily in this 1st of February 2021. Now we don't know what is on the right side, as you have seen that we can't see anything we did on the monthly. Now on the daily, let's continue our replay. As usual, we'll be waiting for, okay, now what you see that you see the price in a downtrend. The blue is above this red, 20 is above 10. We consider it downtrend. As you can see, the price hit already 20 period, but it did not close back below because it's a downtrend. Let's see what happened. Okay, now the price closed just below this 20 period. Now we'll take a short trade. As you see that this is in a downtrend. So let's say we are selling from here, keeping our stop loss above this green doji, the next one doji, and we will keep 1 to 5. Let's say we'll target 1 to 5 and see what happened. Okay, now the price started to move down. Now we'll see how much we can achieve if it hits our stop loss. Okay, the price is moving. Okay, it hits our profit target. You see how the strategy performs. Now we'll take again 2, 3, 4, 5. That means all this goal is achievable in this trade. Now we'll be waiting again. As you see that this is also in a downtrend according to our strategy. Blue is above 20. Now the price closed above 20. When it will close back below, then we will consider any trade. Okay, it closed back below. Now what we will be doing, we'll go say short from here as soon as the candle closes, keeping our stop loss above this red candle, and again we will target say 1 to 5 and let's see what happened. Okay, so what we are seeing, the price is moving in the direction. Okay, it didn't hit our, did it hit? Yeah, it hit the stop loss just at the entry, or it might not hit. Yeah, it hit the stop loss. Okay, so let's put the loss area. So this is the loss. So what you are seeing now, the price is moving in a sideways. Okay, so when the price is moving sideways, stay away from the market until it creates a clearly defined trend. We need to see the breakout. Okay, we see now the price is breaking to the upside. You see the blue is clearly below the 20 red. That means 20 period is below the 10 period. Now we will be waiting for the price to hit this moving average and then we will go for any kind of trade. Okay, what you see, the price just hit this 20 period and closed above. As you see that according to our definition, blue is below the red, that means uptrend. So we'll be buying from here. Let's say we will go long from here. We're keeping our stop loss below this low and say take profit at least 1 to 5. Now keep running the trade. Okay, it hit just before it is going above, it hit our stop loss. Let's keep the losing trade here and now wait for, okay, so when it hit the stop loss on the next candle, you see there is another one just closed above this 20 period moving average. Then we will go long again from here. Okay, keeping our stop loss again below this low, and let's see how much we can gain from here, keeping our target at least 1 to 5. Okay, so the price is moving up and down. Okay, so this is the thing we have to consider. Now see, before hitting our stop loss here, the price went up to see how much. Okay, so the price went to a place where we could achieve 1 to 2 risk to reward. You see 1 to 2.16. That means in this trade what we will be writing 2 and 3 will be 0, 4 will be 0 and 5 will be 0, and that is the reason why we are keeping all these risk to reward, because some trade you will find that you can gain 1 to 2 risk to reward, maybe after that it came to hit your stop loss, so you know that in this trade you can gain only 1 to 2 risk to reward. Now that's how we will be performing this task. Now let's see, again waiting for the price to come back. Okay, what we see that the price again come back to the 20 period, cross it and then closed above. We'll go for long from here, keeping our stop loss below this low, and again we'll target 1 to 5, but let's see how much we can achieve and we will register. Okay, it directly went to hit our profit target. So this one is 2, 3 also achievable, 4 also achievable, and 5 also achievable. Now let's see, we'll be waiting again. Okay, you see the price again came here in this candle, touched this 20 period and then closed above. So what we'll be doing, we will go for long from here again as the candle closed here, keeping our stop loss below this low and take profit 1 to 5 again. Let's see how much we can achieve. Okay, the price, let's see, it almost hit our stop loss. It could hit or may not hit. Let's consider that it hit, but before it hitting our stop loss, let's see how much it went up. So it went up to 2.4 risk to reward ratio. See, the price went there and then came back, hit our stop loss. So in this case we can say that this trade can gain up to 1 to 2. 1 to 3 is not possible, 0, 1 to 4 and 1 to 5 also not possible. And finally we will see which risk to reward ratio giving us the highest return, and based on that we will take the strategy and we will do all the trading. Okay, so what you can see that the blue is below the red, that means we still can consider uptrend. And what you saw that the price crossed this 20 period moving average below and then closed above with this green candle, so we can buy from here. We'll buy from here, keeping our stop loss below all this low, and then keeping a 1 to 5 risk to reward ratio. We will not consider anything else except this criteria, no matter head and shoulder or whatever it is. So because this is the only the criteria for this strategy we are using. Okay, it's hit, yeah, it just hit the profit target, or let's say, yeah, so it hit the profit target. Okay, so we can see that it's performing very well. We can take all these 2, 3, 4 and 5. Now again we will be waiting for another drop and to see if the price hit 20 period. Okay, so the price hit 20 period but is still below. We will be waiting for a close above. Okay, now the price just closed above this 20 period. Now we can consider that it is still in an uptrend, taking a long trade from here, keeping the stop loss below this low and take profit at least 1 to 5. Let's see. Okay, it just hit our stop loss, so let's say consider it as a loss. All right, okay, so we have done couple of back testing. Now let's see the result. But remember, you cannot rely on this only couple of trades. You need to take hundreds of trades before you make a decision. So this is just an example so that you can perform your own backtesting. So what you have seen that in this strategy, that if you close all the trade with 1 to 2 risk to reward ratio, you can gain 20% if you risk 1% per trade and you lose 4%. But if you close all this trade with 1 to 3 risk to reward ratio, then you could gain 24%, you could lose 4%. If you close all those trade with 1 to 4 risk to reward, then you could gain 32%, but you could lose 4%. But if you keep running all this trade until 1 to 5 risk to reward ratio, then you could gain 40%, you lose 4%. That is how you need to optimize a strategy. You can keep even high risk to reward. You can check with 1 to 10. You will see that some strategy even perform better at 1 to 10 risk to reward ratio, and that's how you can convince yourself to keep a winning trade running. I sincerely believe that this video was helpful to you. If you find value in it, then smash the like button and also leave a comment below. This will help me for YouTube algorithm. Thank you and see you soon once again in another video.